What's up YouTube? It's Todd Horsteo with Tasty Tracker, and I made a mistake. I think I got too emotional, caught up in the markets being up, um, you know, last week and leading into yesterday, and I put on more positions than what I should have. Um, I also didn't take off positions, and this is really affecting my IRA account more than this one per se, but it's still pretty apparent here. So let's just go over what happened. I closed the MA position. If we open up the MA chart here, yeah, so it had been down here for quite some time below where I needed it to be. I needed to be above the yellow line. And so then we had this nice pop, so I was smart enough to close that transaction. That was good. And so I closed out with $75 profit. I also closed BA, very similar chart where these were two positions that, I thought had bottomed out and didn't have anywhere to go but up. So again, BA popped and I closed it out. Obviously, this one I could have held longer, but it's better to stick with your strategy. That one I only held for one day, which was, over the weekend. So that was pretty amazing to get 50%. So I got 160 on that one. And then I closed Apple again because it was in a profitable range, and so that was fine. I got 182. But where I ran into troubles here is I have about 2K on W in my IRA, and they had a strong move down, and I think I got emotional here, and I opened the position when it was right in here, maybe 250, 255. I should have waited for a base to form. A base still hasn't formed, so and it won't for at least 3 days before you can determine that it's sort of bottomed out. And I think I was just trying to buy the dip. I was probably frustrated that um, I had these positions that were sort of below where I needed it to be. I needed to be above the gold line, and then just in the nick of time, we have an expiration here in 10 days. And so in the nick of time, it popped back up into my profitable range, and I was green, and my account was overall very much liking this and other tickers. But I should have taken those off, just like I took off these other three. But instead, I got greedy and I thought, oh, well, there's only 10 days left to expiration. Even though these are profitable now or maybe even over 50%, I'm just going to leave them on for the next week and a half because it's a short expiration, short period of time to expiration. And obviously that was a mistake. Then we get a corrected and we see the same thing, not quite so bad with Amazon and some of the others. Oops, let me spell that correctly. But still definitely a correction, and most of the positions I've played are now below. So the open positions I have, I could have taken for profit, and it wouldn't be so bad if they were for December, but a bunch of these positions were for November. So, that was definitely a mistake. So opened up W. Again, this is for December, so I'm not necessarily saying that this position will fail, but it was not a good idea for me to open up a position before a bottom is established. BA closed. DG, I definitely think will be fine. Again, I opened this up on the downward move, but I'm pretty confident that it will hold at the 50-day because of DG is a brick and mortar, and so this should be something that should only benefit, or at least not get as hit by a vaccine coming out. Typically the online retailers were benefiting from Corona, and the brick and mortar were suffering. DG has done good throughout this because of their kind of quickie mart. Uh, their stores are everywhere around the corner, and they're very convenient for people. And so I personally don't really see um, how a vaccine will make this worse. And to me, it seems like it would get better. Of course, I don't know everything, but so DG I still think is fine. BABA I still think is fine. Again, this is a play on Biden winning. Um, the problem with any Chinese stock obviously is that you're opening yourself up to different policies that come, even if Biden is more global commerce. They still might, put on restrictions on the stock. So you open yourself up to that anytime you play BABA or any of these other Chinese stocks. That's not really something I get too concerned about. But let's see here. I needed 285. Click on the right tab. So that puts me the whole way up here, which at the time of yesterday, that was still giving me a margin. And then, of course, today we blew through that. We have the whole way through to December. So I wouldn't say I'm paranoid or anything about this now. And I couldn't have predicted this move yesterday. Obviously, I knew it was coming down, but don't know that's going to break. So I'm actually less disappointed with this one. I'm disappointed with myself on the W play. Opening up on Amazon. Again, I think Amazon is fine. The thing I see with all of these, especially W, is everybody was using Amazon before, but Wayfair and Shopify, those kinds of companies really took off during Corona. But the thing is, some things can't be unseen. So sure, they'll lose some of their revenue as people go back to Walmart and other brick and mortars. But if you've become accustomed to using some of these services, you're less likely to go back to the old way of doing things because Wayfair is more convenient. If you're happy with the experience that you had during Corona, then you're less likely to go back to Walmart, and you're just going to use Wayfair again. So again, yes, they might lose some revenue, but I don't think it's going to go back to pre-Corona stages. So, and Amazon, obviously, half of Amazon is not even something people think about with their services, their hosting cloud services. Obviously, if you're an investor or technical, you know about it, but the average consumer isn't even aware of half of their business or more. So again, I don't really see that going anywhere. That I think was an okay buy the dip opportunity. So I guess I'm really just frustrated at W and my emotions that caught up with that. I still think, they had blockbuster earnings. And I think people enjoy the service. So we're sitting at here sort of a support level. The question is, does this one hold, or do we drop down, another set to somewhere in this range? And obviously, I don't know the answer to that, and I should have waited to see what the market gives us, and instead of my opinions. So the net result here is I was up to over 7,000. And just today I'm down a grand in here, and so you can extrapolate what what that means on my IRA account, which is frustrating, and it wasn't necessary. But yeah, so it's pretty crazy. The market had been here, and I wouldn't say my account was doing great, but it wasn't doing bad, and then it goes up. And then when it comes back down, your account seems to be getting worse. So part of that is that I did close out of some positions and opened up new ones. But it's just weird how that the negative sentiment, impacts your current positions. So at the moment, not looking too hot. Definitely not worried in the sense of the long-term account. sustainability or anything like that. I've got 2K in reservation here, plenty of ammo to back it up. Let's go over to the positions. So I really only have 2 more for November. And again, that's 10 days. So let's just look at those 2 real quick. So I've got Amazon here, which is not too far off. This was fine yesterday. It was right at the money. So this is something that can go up in a day if there is a good day. At this point, if I'm looking at the November, right here it's 707. So I could close this right now and get about $300 back. At this point, if you're being conservative, you can get your $300 back. The flip side of that is you're closing it on a down day, which is obviously the worst time to close it. So for me, $300 more, I would rather just risk with the knowledge that I could 100% lose that additional 300. So not only am I losing, whatever, 700 minus the premium collected, but then an additional 300 on top of that. That's a risk I'm willing to take. I certainly hope that it plays in my favor, but nothing is guaranteed. And here, again, I could get $200 back, but it's times 2, so I could get $400 back if I close this position right now. SE is not that far away. I need to get to 160, and we're at 156. So this is 100%. Again, this was fine yesterday. 100% fine. Could very well happen in the next 10 days that we get right back where we need to be. Obviously, it could very well happen that it continues to go downward. Yeah, right now we're right below the 50. I think we'll hopefully in the next couple of days have the 50 actually act as support. A lot of people think the second it crosses through, it's going downhill, and we see that all the time, where it plunges below the line, and it will either close above this or even close to it, and then in following days it will hold it. So, at this point, you could say this tested the 50, but I also view, especially like this move here, I view this as a hold of the 20, even though it closed below the 20 these 2 days. So, I guess it's all depends on your interpretation. I don't view a plunge through as necessarily breaking it. What I view breaking it is if we get a more extended period of time, a week, the longer it stays below that support is, that's showing more significance. So anyway, yeah, those are those 2. Let me see if I have anything else to talk about. I don't think so. I've got the December portfolio built up pretty fine. We can see we've got about 3,500 allocated. This is rolled in with the December expiration. I had to go a week earlier because DG was 10 wide, and I only wanted to do a half position here. So most of these are 10 wide or 2 5 wides, and I didn't want that for DG because of the risk I associated with it. Yeah, so I guess that's it, and I will talk to you next time. Thanks.